May I start? Yeah. Shri Bishan Sahab, Shri Ketan Sayya Sahab, Jinal Salva Madam, and Jigar Shah Sahab, and many distinguished professionals, chartered accountants, and leaders of industry. It's a great opportunity for the department to interact with you, that too people from Mumbai. Mumbai is very close to my heart. I have come here as Deputy Commissioner way back in 2001. I left Mumbai after working in Central Excise, Service Tax, Customs, Directorate of Valuation. For 13 years I have worked. I left Mumbai 2013. From there I went for various posts and went to Delhi. So to that extent, I am thankful to ICA for giving me an opportunity to interact with the young generation. Like most of people I am seeing here are very young professionals. So whatever little bit contribution that department can do for building up your professional standards, it is actually our duty. Plus, we are thankful for ICA for giving this opportunity to us. Now coming to the topic, today the topic that we have picked up is what is the impact of GST on customs, or how do we handle customs related matters which are having impact on the GST. I hope the point is clear to you. As a CA, do I operate this any remote control operations? As a CA, you may be good at your subject. For becoming a CA, you would have done a lot of courses. Customs also would have been one of the courses that you would have done. But prior to introduction of GST, you may be focusing upon, some of you may be focusing upon income tax, some of you may be focusing upon, yeah, good, thank you, sir. Thank you. Some of you may be focusing upon whichever area your expertise. But after GST has come, all of you know that GST has brought in central excise, service tax into a GST format. So the customs area, which was operating separately by central government, now has complete impact on the GST level operations. No chartered accountant will be doing justice to his job unless otherwise he has a clarity of thought and knowledge in customs. So customs is not a separate area which is to be excluded. The very purpose of this today's presentation to you is to briefly sensitize about the customs related issues which are having impact on GST. I hope all of you agree. I hope all of you agree for this kind of area. I hope it is interesting for you. Now what I will do is, I'll go through a presentation. I have divided into 5 parts. First I will cover about GST on import and export. One by one I will take. First I will cover about exports, then I will cover about imports, then I will cover about some 3-4 concepts of related to exports, then I will go to SEZ. I think that is good enough. Refunds area I am not covering because of some other reason. Now before I go to export import, first is clarity of thought should be there. What was the change that was brought in 2017, 1st July 2017, when GST has come in with respect to customs. As you are able to see on this slide, pre-GST regime, if you are importing any goods into the country, there were 3 basic duties that were charged. That is basic customs duty, 100 rupees, let's say 10% on that basic customs. And then there was what is called countervailing duty, CVD. There is any highlighter? Ye wala hoga na? Okay, anyway, I'll show it by. No. Laser pointer aata hai na? Can I get that? This one? No, not that. No issue. So there was basically countervailing duty. There was SAD. Suppose there is 100 rupees, 10% on customs duty, 110. On 110 we used to charge what is called countervailing duty, which was equivalent to central excise duty, as if the goods were manufactured. Over and above that, for sale purposes, to equate with VAT, we used to charge SAD. Now, apart from this, there used to be anti-dumping duty, safeguard duty. And now, post GST, what has happened is that basic customs duty remained the same. The countervailing duty and SAD have got converted into IGST. The general concept of IGST is that interstate supply, that any person understands. The same amount of interstate supply duty is charged when the goods are imported. Others are continued as such. There is no difference. Anti-dumping duty, safeguard duty has continued. New thing has come in GST, that is compensation cess. Same thing will continue for imports also. So whenever some people talk of IGST, first you have to ask yourself whether IGST is for within India interstate supply, or is he talking about IGST on imports? Similarly, if somebody talks of compensation cess, whether it is for the supply of goods within India, or is it compensation cess at the time of import? So there are two kinds of compensation cess, GST compensation cess. I hope all of you are aware there are certain specified goods on which compensation cess has been imposed. If those goods are imported, on this there will be compensation cess charged at the time of import. And also you are aware that health cess is there on import on medical devices, which is started from 2020. I hope this is clear. I'll go step by step so that you understand. Now we will see how exactly the CVD has transformed into IGST. Legally and constitutionally, clarity of thought should be there. What was the CVD prior to GST? That was basically under Customs Tariff Act. You are aware there is a Customs Act 1962. You are also aware that there is a Customs Tariff Act. What does Customs Tariff Act indicate? It indicates various commodities against the what is the applicable rates of duty. That is a schedule. Prior to that, there is an act. In the act, there are provisions. The CVD was levied on the basis of Section 3(3) of Customs Tariff Act. If you see the Constitution, as per Article 246, there is a List 1, List 2, List 3. Our customs duty will come under List 1, serial number 83. Now, this particular CVD is imposed at the time of importation, no doubt. Whatever the CVD that is collected will go into Consolidated Fund of India. It is distributed among states as per the recommendations of the Finance Commission. Perfect? Are you clear? No doubt, sir? Now let's see what happened post GST. When IGST came, what happened is that this IGST that we are imposing under proviso to Section 5. There is a Section 5 of IGST Act. I hope you are clear, no? CGST Act is there, SGST Act is there, IGST Act is there. In Section 5 imposes IGST in case interstate supply. There is a proviso to Section 5 which will authorize you to impose, but that proviso says clearly that read with Section 3(7) of Customs Tariff Act. You remember 3(3) was there? 3(7) of Customs Tariff Act. And this is as per Article 269A of Constitution, read with of course 246A. Now, many people have this confusion whether IGST at the time of import is imposed on account of IGST Act or is imposed on account of Customs Act. Can anybody answer? Under what act it has been imposed? Anyone? Just now I told you, it is read with both. One should not get confused into this saying that this is a customs duty. It's under Customs Tariff Act. One should not get confused saying that is IGST duty and IGST Act. Please always remember that it is imposed under proviso to Section 5, read with 3(7). That is why supply of goods, here also supply of goods import into India, read with the machinery provisions of Customs Tariff Act and Customs Act. Section 12 of Customs Act is the charging section. Under that only it is levied. And IGST, once it is collected, it goes to the states as per the recommendations of the GST Council to the Parliament, unlike what goes into Consolidated Fund of India. Am I clear, sir? Conceptually, I hope you are clear. Now, let's get on to the little bit into the legal aspect. I'm slowly introducing and slowly one by one I'm going. Now, as I mentioned it to you, the IGST is introduced, IGST is charged at the time of import as per the proviso to Section 5(1) of IGST Act. Let us all read, kindly read with me. What does it say? It says, provided that the integrated tax on goods imported to India shall be levied and collected. I hope you are reading with me, all of you. Please read with me. Imported into India shall be levied and collected in accordance with the provisions of Section 3 of Customs Tariff Act. 3 has many subsections. Section 3 of Customs Tariff Act on the value as determined under the said Act. Said Act means what? Customs Tariff Act. What is the value? That is the value on which it is decided. At the point when the duties of the said goods under Section 12 of Customs Act are collected. Section 12 of Customs Act are collected when the goods are imported into here. So it is very clear that IGST on the imported goods can be charged as per the proviso to this. Three aspects you should remember. This is as per the provisions of Section 3 of Custom Tariff Act, value as determined in the Custom Tariff Act, and this is as per the charging section in the Customs Act. That is why many people corner you. You could be your client, it could be even departmental office. Even though I am from department, I am telling. Some people may take convenience sake, argument say, no, it is custom duty, I am not worried about IGST. Some people may take convenience, is IGST duty not? Is the only duty which is combined with this. That is the very purpose of this lecture. Okay, sir? Now here again, when if it is a goods imported to Customs Tariff Act, we have Custom Tariff Schedule. Anyone, have you seen that? Anyone of who has not seen? Custom Tariff Act you have seen? Schedule you people have seen? No? Anyone who has not seen? So it is a very big book. It will list all the goods in the world starting from chapter 1 to chapter 98. It will give you for every good. This is all over the world. It is called HSN, Harmonious System on Nomenclature. For every good there is a tariff heading that is given. Against the tariff heading you will have what is the rate of duty. So as per this it is charged. Now what happened when we had GST? Do we have GST tariff? Any one of you? You have GST tariff? There is no GST tariff. So what they are telling is, at the time of interstate supply, as well as at the time of import into India, these notifications that they have given, for example, 1/2007 IT integrated tax bracket rate, that particular notification given itself acts as a tariff. It tells you what is the rate of duty to be charged as IGST at the time of import. For that purpose, if you read that notification, explanation 3 says, tariff heading mentioned in this particular notification at the time of import, I am saying, are same as tariff heading mentioned in the Custom Tariff Act. It also says that explanation 4 says that for the purposes of any classification dispute, whether this rate to apply, that the general rules of interpretation are given all over the world. HSN nomenclature. Same general rules of interpretation will come. Custom tariff is divided into sections. The section notes are there. Same like metals one section, textiles one section, machinery one section. So those section notes, as these are all over the world the same. Same section notes is applicable for IGST also. If there is a chapters, within section there are chapters. The chapter notes that are given, HSN explanatory given, all of them are applicable to this. Please understand one thing which I have shown you at the bottom, saying that rates of duty that are mentioned in the schedule are the same rate of duty that charged at the time of import. IGST at the time of import is equal to IGST at the rate at which you are doing interstate supply. That's what I'm saying. I hope you clear that. Now let's get on. I hope till that clear. All of you has to say yes, then only I will proceed. Sure. You are participating with me? You are with me? Bas. Let's get on to export. Now if you see export, the very term export doesn't appear. It does appear but not directly appears in our IGST Act. This is a new term that they have called, what is called zero rated supply. What is zero rated supply? It is defined as export of goods or services. See, when you are talking of GST, it is goods and services. Am I correct, madam? Goods and services, both you have to talk. So it is exports of goods and services and supply of goods and services to an SCZ. Now what is SCZ? You may be aware, but I will cover in my presentation also after some time. This is called zero rated supply. If you talk in terms of what is export of goods, I will take you that definition. If you see in IGST Act, see I am taking you to specific provisions. I am not reading an act. You can have, in case you have a book, you can have, or you have a laptop, you can have. So I will take you directly to that provision without wasting time. What is export of goods? It is defined here. In section 2 of IGST Act, export of goods is defined as taking goods out of India to a place outside India. From India, you are taking goods out, that is called export of goods. Same definition is in Customs Act also. That is what is export of goods. Plus supply of goods to SCZ. This is called zero rated supply. See, before coming to GST, we were having manufacture, but after coming to GST, we are using only term called supply. Similarly here, even IGST, you should talk of zero rated supply. That's the whole thing. Now, if you go to IGST Act, in zero rated supply you are giving, why they are calling zero rated supply? Conceptually, you have to understand. What happens in zero rated supply when you export the goods? You get refund of the duty that you pay on the manufactured good that you have exported. There are two models. One is refund model, other is the rebate model. One is where you pay duty on the finished product. Because what did we say? We said export or import is nothing but interstate supply. I will show you that provision also. I think first I should show you that provision. Kindly read it here. Kindly read section 77(2). Supply of goods is imported into a country, delay cross the customs frontiers of India, shall be treated to be supply of goods in course of interstate trade and commerce. Section 7(2) is reading. Meaning, if I am importing goods into India, or if I am exporting goods out of India, it will be treated as if the goods are being supplied from one state to other state. It is treating India from, let's say I am exporting from Maharashtra, let's say I am importing into Maharashtra. Maharashtra is one state. Anywhere in the world is also another state. As if I am supplying it to interstate supply. This is what is called interstate supply. Once that definition is clear to you, in fact here there is a term that is used, which I think you should understand, is the customs frontiers of India. What is customs frontiers of India? What is customs frontier of India? Anyone? Indian territory. Where is it defined, sir? It is defined in the Customs Act. In Customs Act section 2, there is a definition. What is customs area? This is customs. So keeping this in view, I want to take you to this particular refund model where I have coined the word zero rated supply. For what purposes? Zero rated supply because you are going to pay on the goods that you are exporting as if those goods are manufactured here, as if those goods are supplied from Maharashtra to Gujarat. So you are exporting. So one model is that you pay the tax on the IGST as if it is being supplied, then you ask for refund of that. This is called unpayment of IGST. You don't want to do that, no issue. You can follow another model that is called you export the goods under bond. You don't pay the IGST that is chargeable on that. You export it under bond. Once you export under bond, you don't have to pay duty on the finished products that are being exported. But the advantage you get is that for manufacture of those finished goods, some inputs would be there. Am I correct? Input goods would be there, input services would be there. Those input goods and services would have come with the duty. So that particular duty you would have taken it as a ITC. Now this accumulated ITC will be refunded to you. So that is the model that you can follow, where supply of goods and services both without payment of IGST, but you can claim refund of the unutilized input tax credit which got accumulated. Am I clear, sir? Am I clear why we have called it as zero rated supply? Anyone, any doubt in this? The fundamental will have to be strong. Now, I'll come to when you are talking of interstate supply, when you are talking of export, one should understand what place of supply. Place of supply is the one which will determine whether it is IGST to paid or CGST, SGST paid. So what happens to the exported goods? What is the place of supply? Place of supply is defined as location outside India. Because you are sending the goods from India to outside India. One has to understand that when you're talking of goods. When you're talking of services, I can deal them separately, but because the right time to cover, I'm covering that also. That is, if it is B2B, business to business, it is considered as location of recipient. If it is business to customer, it is located as location of the supplier. If it is services, if you are exporting services. Fine, sir. Now the fundamental, meaning I am talking about general knowledge only, fundamental doubt will come because as a professional, my exporter will come to you, will ask you, sir, do we have to register in GST? I am not doing any supply here. Why do you have to register? This doubt will come to many people in the country. Because at the time when we are doing the export-import, I never bothered about GST registration. At that time, I used to have only IC code number I used to export given by DGFT. So many people may ask you this question. So I thought I will clarify to you. The current provisions are saying that section 22(1), I am dealing about goods, let's say. If you are touching a level of threshold limit of, anyone, sir, from this row, how much is the threshold limit? 20 lakhs for goods or services. If you are dealing only with goods, 40 lakh. Correct, sir? Then registration is mandatory. That's what section 22(1) says. What does section 24 say? Let us say. Section 24 says that, very important, it said, notwithstanding anything contained in subsection 1 of 22(1), the following compulsory to register. The following persons shall be required to register. Who are they? Persons making. Yeah. So we said export is for interstate supply. So is there any doubt left over now? Am I clear, sir? So once you are doing exports and you are having it is treated as interstate supply, I hope you remember. You want me, I want to show it to you again. I'll show you that definition. This is the one which says interstate supply. Once it is interstate supply, there is no question of not having any registration. So registration is mandatory. Now, sir, there are some people who are dealing with those goods which are exclusively in the business, which are either not liable to tax or wholly exempt. So for them, no need. If it is a taxable item, if it is not exempted, then we are telling that you please register. Suppose somebody is manufacturing, somebody is handling with goods which are not liable to tax or wholly exempt, you need not do that. This is about goods, sir. So mandatory registration, I mentioned it to you. And I also can mention saying that in case you are exporter of services, it is not mandatory. There is a notification that I come out with that. It says saying that as per 10/2017, if you are dealing with export of services, which will be treated as, till you reach the threshold limit of 20 lakhs, you need not register. That still applies here. I hope, am I clear now? Everyone, sir? I hope you will be able to advise your client correctly. Yeah, now comes to the ITC. ITC is very, very important. Entire game is of ITC only. Now, if you remember here for export and import also, what is required to be taken is ITC. So, section 16(2) of IGST Act says that you can take the ITC subject to 17(5). What is 17(5), sir? Anyone? Black credit, for which items you are not allowed. So, subject to that black credit, you can take the credit of input tax available for making the zero rated supply, notwithstanding supply may be exempt supply. It could be even exempt supply also. But still, if anything is coming into the inputs, whereas interstate supply, it is not there. But for this, if anything is exempted also, you can continue to take. No reversal of common ITC of supply of exempted zero rated supply, 17(2) is also saying. But this particular credit, why am I taking? I am taking it for the refund purposes. What are the refunds I get? I have already covered it to you. One I said is about export under LUT I get. Other is that export because of the accumulated credit. Am I clear, sir? Am I clear on this slide? Now, let's get on to the invoice. Now, when you wish to export invoice, there are a lot of provisions in the interstate supply also. Same kind of provisions are here. Section provisions for raising invoices as per the section 31 of the CGST. Now, in this section 31 of CGST Act, it says saying that if you are supplying goods, before you send the goods from the supplier to recipient, you have to raise the invoice, correct? Before that, at the time of removal of the goods for supply to the recipient, where supply involves movement of goods. Am I correct? I hope this is basic fundamental. Same thing applies here also. If delivery of the goods is making available to them at the time, then other cases, whatever the other thing for same issue is here. If you are moving your goods from your warehouse for export or from your factory, then you have to cut your invoice. In case of supply of services, sir, I have quoted section 31(2) with rule 47. Specific rules are also there, which will clearly say saying before or after revision of provision of service, but within the period as scheduled, that is 30 days or 45 days, depending upon the kind of transaction. Am I clear? Now, let's get on to exports. Now, I will summarize. Okay. What I will do is I will just introduce the topic, then I will summarize, then go to imports. Okay. Now, exports, what did I say? First, I said saying the coined a word of zero rated supply, which includes supplies to SEZ. I have also mentioned about 2 refund models that are available. I have also mentioned saying that time of supply for services and export is that IGST payable and advance amount. This is in case of services. And rule 96B also I want to mention that in case you want to claim refund, then remittances, foreign remittances raising is mandatory. That rule 96B has come from 23rd March. It's a refund, recovery of refund amount with interest if export proceeds of the goods not realized within the period allowed as per the FEMA and RBI, including an extension of such period. Certain important aspects I have covered in the summary also. I have also mentioned it here that export of goods is shipping will, when you are doing the export, when you are filing shipping bill, that itself is treated as your refund application. There is no need of filing another refund application. I also would like to mention that whereas in all other cases, if you are claiming, then you have to do as a RFD 01. IGST payment mode versus LUT model, which I have already mentioned it to you. No refund of IGST and capital goods under LUT model. LUT model means under letter of export if you are doing. Capital goods, whatever is the ITC that you have taken, that will not be refunded. While calculating the refund of unutilized ITC, government has amended the formula and capped the value of export good to maximum value of 1.5 times available in the market. I think that you are right. So these are the specific rules which I thought I should bring it to your knowledge before I go to next topic. So till here, are we clear on exports? Any doubt? Last slide. Yeah. Are you clear on exports? The question answer, I'll put it in the last. Just want to know, is the clarity is there or not? Fundamentally, if there is something abstracting, then we can cover this. Then let's get on to the imports, sir. Now, imports definition is as given in the section 210 of IGST Act. Import means bringing of goods into the country from a place outside the country. Exactly mirror image of the export. Now, proviso to section 5.1, again and again I want to read, because this proviso, every time I read, every new things I will find out. Now, I will read again the provision. Kindly read with me. Proviso to section 5.1 says that, provided that integrated tax on goods imported into India shall be levied and collected with the provisions of the, in accordance with provisions Custom Tariff Act, on the value determined said act at the point when duties of customs are levied. This is very, very important. Whenever you are collecting duties of customs on the said goods under section 12. Into bonded goods, separate times you collect. That only, there are two kinds of import. One is imports for home consumption, that from port area you pay the duty and clear your goods and go. Second is that into bonds, meaning you bring it into a warehouse, you don't pay duty. Then at the time of ex-bonding you pay duty. That is why that word I have underlined. At the point when duties of customs are levied on the said goods under section 12 of the Customs Act. Am I clear, sir? Import. Now here again same thing. Now whether I am an importer, I am not a supplier, so I am an importer trader, so do I have to register? Again same drill one has to see. Kindly see that section 22.1, there is a threshold limit that is given. Meaning if you are dealing with goods and services 20 lakhs, sir. If you are dealing exclusively with goods 40 lakhs. Next it also says that if you read proviso, if you read 24 section, which says saying that notwithstanding anything contained in subsection 122, the following categories are mandatory. Which is the category I am talking of? Category 3. What does the category 3 says? People who are dealing with reverse charge mechanism mandatory. Correct, sir? All of us know. Importer, is he paying duty on reverse charge or forward charge? Correct, sir? So once he is paying at reverse charge, your act says what? It says mandatory for you. Very clear? Absolutely no doubt. So if you are dealing with mandatory registration, if every importer is paying duty on reverse charge mechanism, then he has to pay. Now, there is one more reason, I mentioned it here at the bottom, you can see, there is one more reason why importer should register also. Sir, entire thing as I mentioned it to you is the ITC. So, for taking ITC, it is mentioned there that 16.1 of CGST had said that every registered person shall subject to the conditions and restrictions may be prescribed and in the manner specified in section 49 be entitled to take the credit. The registered person is saying. So they cannot be an importer who will take ITC if he is not registered. The ITC ledger itself will not get opened up. So to that extent also we have to be compulsory registration. However, sir, if you are dealing with goods which are completely exempted, wholly exempted, and they are not liable to duty, then no need of registration. Now, with respect to services, it is mandatory registration being taxable under RGM as per the so and so of the notification. There is a 10/2017 notification which says that if you are dealing with services, it is mandatory for you to register. Am I clear? Imports. Any doubt? Yeah. Yeah. Huh. And then after that, there was no communication or notification from the government side. And still there is an ambiguity of RCM on the import of services. I'll come back to that. I note down that. I just note down that. I'll come back to your topic again. Now, I'll just summarize on the imports and tell you, summarizing means summarizing plus additional points. So, I would like to tell you saying that the time of import, I have already mentioned to you, there are Now you have to pay how many duties? BCD, you have to pay IGST, and you have to pay compensation cess if it's applicable. You have to pay medical cess if it is medical rate. If there is any anti-dumping and safeguard, you have to pay. You remember the slide 1, I have shown it to you. Registration, I mentioned to you, no registration required. In case you are importing into a particular port, and from that port you are directly supplying. But if you are importing into a port, let's say Maharashtra port, then you are supplying to Gujarat, then obviously the place of business includes warehouse. See, if you are importing at this particular port, from here you are supplying it to your customer, it's okay. That's a different scenario. No registration is required in the state of port, meaning you are not operating here. If you are operating here, if you are storing your goods here for some time, then supplying it to them, then you will have to register this particular warehouse in Maharashtra also as your place of business. That is one important aspect I thought I will cover. With respect to services, I have already mentioned to you whether it is a course of furtherance of business or not, and import of services is individual purpose. If it is for individual, it is not, no need to go for any registration. Am I clear, sir? Import, export. Fundamentals I am covering so that I'll go deeper and more into more. Yeah, am I clear, sir? This side, middle row. Now I will kind you 3-4 terms which you will be coming across as professional. Many people will tell you this, saying that I am not doing export, sir, but this is a deemed export. Then doubt comes to us, what is deemed export? We learnt about zero rated supply, we learnt about exports. Now new thing called deemed export. What exactly deemed export? The very term deemed export means it is export, but it is not export, but it is called deemed export. Sir, if you see here, section 239 says deemed exports means supplies of goods. Very, very important, sir. Why did I put yellow there? Any person from the middle row, sir? Sir. Excellent. Very intelligent man. So it says saying that it's only supply of goods, not for services, deemed exports. Then it says that may be notified under section 147. What does 147 section say? Let us read and understand. The government may, on the recommendation of the council, notify certain supplies of goods as deemed exports where goods are supplied do not leave India. First point is that goods are not leaving India. So it is not an export, but it is a deemed export. Payment for such supplies is received either in Indian currency or foreign currency, and if such goods are manufactured in India. I am not dealing with imported goods. Now, before I get into this, let's see what are those. We said such supplies of goods as may be notified under 147. Having read 147, let us see what is that notification. So this notification is called 48/2017 notification. This notification has given 4 kinds of goods as notified under as deemed export, which are the advance authorization. How many of you are familiar with DGFT export promotion schemes? You're familiar. So a chartered accountant is a professional, so he has to understand DGFT provisions also. So there are certain export promotion scheme given by DGFT. I will cover one slide on that also. But please understand saying that if you are supply of goods by a registered person against advance authorization license that is given for a person to import without payment of duty on a promise that he will export. Pre-export condition is waived now, but you can do the export later also. So pre-import condition is waived. You can do the exports first, then you can take the license. So that is also not possible. So, but advance authorization, this is called deemed export, meaning supply of goods by a registered person against advance authorization. Similarly, sir, under EPCG scheme, you can import a capital goods and use those capital goods for manufacture of the goods and export them. This is called EPCG scheme. So, supply of capital goods by registered persons against EPCG scheme. They are EOUs, export-oriented units, where goods are imported free of duty, manufacture goods, and these goods are exported. This is called EOU. So, again it says supply of goods by registered person to EOU. Then supply of gold by public sector undertaking. So, these are the 4 categories which have been notified under section 147. I hope you get an idea now. These are called deemed exports. Sir, here are the 4 important conditions for a thing to be called deemed exports. I have listed here for your convenience. One is that it has to be goods only, not applicable services. 2 is that it is required to be taken outside India, not required to be taken outside India. 3, sir, it has to be notified, which I have shown you the notification. Next, it says this should be manufactured in India. then you can receive towards that either in Indian currency or foreign. Am I clear? Am I clear? This is called deemed export. Now little bit deeper and deeper. Now let's go into what is rule 89(1) of third proviso says. Third proviso, I'm only taking it to that particular area which bothers about this topic so that you don't have to roam around here and there. Now the third proviso to rule 89(1) CGST rail says, either supplier or recipient of such supplies can claim refund in tax in respect of supplies related to export, deemed export. Meaning, if I am supplying deemed export to EOU, I'll show you the picture also. I am a supplier. Should I claim the refund, or should the EOU claim the refund? Who should claim the refund? Either can claim, but not both. If the supplier comes, then recipient should not claim. If recipient claims, supplier should not claim. I hope you are clear on that. Two, sir, it also says that supplier has availed deemed export benefit. Let us say the recipient. Who is the recipient? It was advance authorization holder or EOU. Cannot claim refund under IGST model of zero rated supply. Rule 9610. Of course, there are modifications and changes in Rule 96. I am not getting into that. Similarly, sir, this is receipt of capital goods under EPCG. The only exception under Rule 96 is given is for the capital goods under EPCG. And also would like to say the refund of IT availed in respect of other inputs and input service used in making zero rated supply shall be given as per Rule 89(4)(a). There are two rules, 9610, 89(4). I hope you understand, you remember them. Now, through a picture, I will make it summarizing or very clear to you. Let us take one particular supplier is in Mumbai. He is supplying to particular EOU. Sir, what happens this kind of supply, if you say, is this called deemed supply, deemed export, sir? Deemed export? Yes or no? Pakka? Okay. Now, is it zero rated supply, sir? This side? It's not zero rated supply. Sure. Now, can he make this supply, can he make a supply an LUT or bond? There is no question of LUT or bond. In exports, there I have two models. But here, deemed exports, no LUT and bond. Sir, GST should be paid at the time of supply and refund of tax can be claimed. Am I clear on that? You pay the GST and clear. There is nothing called, I'll do it under bond, then I'll think about it later. No. Here very clear that you have to pay the GST at the time of supply and you can claim the refund. Am I clear, sir? Now, let's come to EOU. The EOU unit supplies it to abroad. Let us say they sell it to Singapore person. Then what happens? Is this called export or deemed export, sir? Sure, it's not deemed export. Now, is it also called zero rated supplies? Perfect. Now, can he do it under bond or does he have to do it under payment of IGST here? In deemed export, because he receives it from the person, our suggestion is that he should do it under LUT and bond only, not under payment. Because he is anyway receiving it under payment, so best option is to go for the LUT and bond only. Okay, sir. Now, let's get on to these categories. I have shown it to you, which I did not repeat. The four categories only till now as on date as per the notification. One is advance authorization, EPCG, EOU and bank supplies. Now some people may have, I mentioned it to you, DGFT Act also some relevant provisions one should update yourself. What is advance authorization? One should have a clarity. I mentioned it to here saying that under DGFT trade policy, there is a DGFT Act, there is a DGFT policy, and the DGFT trade policy of latest policy that is available, import or domestic procurement imports, a pre-import condition and for physical exports is waived. Meaning, I can do exports first, then I can get advance authorization, I can use it for the import. Generally, what should have happened academically to understand that you should import raw material without payment of duty, use that raw material and export it. That is called advance authorization. But now the pre-import condition is also waived. Similarly, here there is a role for chartered accountants, which I thought I should bring it to you. I have particularly brought this to your knowledge. Sir, when in order to avail IGST credit on import of raw materials by deemed exporter under the advance authorization scheme, a certificate is required to be given by you. This is called certificate by chartered accountant. It must be submitted to judicial GST commissioner within 6 months of such supply. No certificate is required if ITC has not been availed on inputs used in manufacture of goods. proviso inserted in the so-and-so notification. Everything I'm talking, I'm not talking in here, I'm mentioning you the particular notification. Am I clear, sir? All of you deemed exports understood? After this class, will somebody say that I don't know what is deemed exports? Madam, middle row. You will not say that, no? Deemed export, you have an idea now. Now, last on deemed export, so that you have a clarity. Here is a deemed exporter. He is able to receive the goods on imports. If any person has doubt, please make it clear. Deemed exporter, deemed manufacturer, he can receive the goods on imports. He can take the credit. I have shown you example here. He can receive services, take the credit. He can receive capital goods, take the credit. Total credit he has taken is 43,000. Now, sir, he is supplying it to, let's say, EOU. It's called deemed export. Fine. Here, what does he do? Output tax on this combined together, value addition becomes 3 lakhs, 18% was 54,000. So 54,000 is the tax that he will be discharging. Am I clear, sir? Does this picture make you very clear? So what I am trying to do is the mind mapping. If you remember this picture, or if you click this picture on your mobile phone, you don't have to remember anything. Entire picture would be easy for you. So I want you to, of course, this presentation will be circulated to you, but mind mapping is one. Mind mapping is one from which we can capture many things. That's the reason I'm trying to show it as a pictures. Can I move from deemed export now? Now many people will talk about merchant exporter. But what is merchant exporter? Any guesses? Any person? All of you must be knowing already what is a merchant exporter. Any one of you, sir? You are aware. The merchant exporter is the person who does only trading of exports. He doesn't manufacture. He purchases from an exporter, then he exports. So we have given a special provision to them. That kind of persons, what we did was that if you are a supplier, one supplier is manufacturing goods, he is giving it to one merchant exporter. When he gives it goods to him, he doesn't have to pay whatever the applicable IGST. What we are telling under this scheme is that he has to pay only concessional rate of 0.1% if IGST. If CGST or SGST, 0.05% on CGST, 0.05% on SGST. Give it to this merchant exporter. This merchant exporter shall export it. That's all is called merchant export concept. I'll go back to the basic definition. Merchant exporter means, sir, as per the definition, it means a person who is engaged in trading activity of exports. There is a notification 40/2017, read with so-and-so particular, this is central tax notification also I'm mentioning for your convenience. And I'm also mentioning IGST notification. Merchant exporter can receive goods at concessional rate. He is a merchant exporter. Concessional rate of 0.05 CGST and IGST if they are located in the same state. If they are located in different states, are 1%, 0.1%. Then what he has to do? He has to compulsorily export. Why? Instead of paying the applicable IGST, you are paid a concessional rate. Now, sir, Rule 9610 again says saying that merchant exporter can export the good only under bond. Only under bond. Then it says then a refund in the case of merchant exporter, refund to the supplier will be given on what criteria? Refund to the supplier. This is the supplier. This is the supplier. Refund to the supplier will be given on the criteria of? Perfect. Very good. Very intelligent. Inverted duty structure. So because what happens is that his exports are, his supply, output supply is happening at the rate of 0.1%. His inputs have come in already higher rates. So accordingly, what does he do? Refund to the supplier is given, who supply the goods at concessional rate eligible for the refund on account of the inverted duty structure as mentioned in the first proviso to section 54(3) of CGST Act under clause 2. Am I clear, sir? All of you clear? Sure? Let's go. Let's get into this picture so that picture it will make very clear. Now you have to answer me this. This is a supplier manufacturer in Mumbai. He is supplying it to one trader in Delhi. I come from Delhi, you are at Mumbai. That's what I said. He is supplying it to trader in Mumbai. Let's take that scenario. Now, this person is supplying, this is called, he is supplying to merchant exporter. Is it called merchant, is this particular concept is merchant export or merchant exporter, is it called zero rated supply? Are you sure? All of you, will you call it zero rated supply, sir? Sure? Wow. Now, supplies cannot be made under bond. Can you make supply under bond? Be very clear. No. GST is payable at concession rate or he has to pay full rate? All of you. Concession rate. Refund of tax can be paid to the supplier or not? Yes or no, sir? Yes. Under inverted duty structure. Sir, what happened to the merchant exporter? Merchant exporter is, can he take the refund also? He's accumulated 0.1%. Can't he take refund? It is accumulated to him, sir. He's purchased those goods from this person at 0.1% or 0.05 plus 0.05. He's exporting the goods. Can't he claim that accumulated credit as refund? Yes, yes. That's what I'm saying. The supplier can claim whatever his accumulated thing, and the merchant exporter can also claim. Nothing wrong. Now let's come to the merchant exporter. Merchant exporter is supplying it to, let's say, somebody abroad, Singapore. Sir, are you going to call this as export? Yes or no? All of you should say. Yes. Is there zero rated supply, sir? Yes. Can you do it under bond, sir? Perfect, perfect. Very active, very intelligent people, Bombay people. Really, I've gone to Kolkata recently. Twice I have covered in Kolkata, one for officers, one for other things. So when compared to, Kolkata, Bombay people are very alive. I don't know. Some movie somewhere said in this air itself, business attitude is there. Somebody's dialogue. Anyway, let's come to this. I'm just summarizing. Concessional rate for merchant exporter is very clearly mentioned in this particular notification. Sir, whenever you argue, please do not argue with government officials. There are actually, egoist people. Whenever you go to government officials, even though I'm chief commissioner, I'm telling, whenever you, yeah, she's smiling. Thank you for that. Whenever you go to any officer, or whenever you go to your colleague, especially when you go to your boss, go with always? No, smile what? You can't purchase everything once. Go with book. Go with notification. Go with the relevant notification. No argument, sir. If somebody says, sir, why you can pay? No, you cannot pay. Sir, this notification. Either you go to your boss, either you go to your officer, either you go to your colleague. No need of argument. Why to quarrel? You should be perfect with the notification number. You say, this is the notification, sir. You want to see, cut, laptop or mobile, show them this notification. So always remember the notification provisions. You open up, first is, you should be quick going to that notification if you're having a book. The skill of going into that notification with less time is what is required. In our childhood, we used to memorize a lot of things. No, now today's generation, you should know which is where. That's all. If somebody says this particular notification, so you have to only go to that notification, show it to them, sir, this notification says so. That's the reason I'm mentioning the notifications. I hope my purpose is that one should have authority to talk about it. Mind mapping picture, sir. Here again, he is a manufacturer. He is now taking credit of goods, inputs, allowed, capital goods, allowed, services, allowed. Yes, sir? Allowed or not? Now, when he gives output supply, what is the rate he will give? He will give it at 0.1%. So input credit is accumulated 43,000. Output credit, how much is utilizing? 300. So he will ask for obviously refund of 40,000 plus whatever is the amount. Am I clear, sir? Should I go further? All of you are happy and understanding? Bas, let's go. Now, sir, central government and state government, the difference is that central government was doing indirect taxes for a long time. State government was also doing VAT for a long time. When we married central government, state government and brought this CGST, there are a lot of concepts that have come in. One concept is e-way bill. So every time doubt comes to many people in import and export, what is the role of e-way bill? Because state government people sometimes catch you for not carrying e-way bill and put penalties. None of you have experienced. You are not experienced how much penalties to put if e-way bill is not there. Blue shirt gentleman. Huge penalty, no? So let's have some clarity on import-export whether e-way bill is required or not. One should be very clear on that. Now let me take first exports. Now sir, before I go to exports, let us have clarity about what is e-way bill. All of you know, I know that all of you know very well, but still one quick revision of e-way bill provision. E-way bill provision says saying that if it is e-way bill is compulsory, if it is a consignment value is less than compulsory, more than 50,000 compulsory, less than 50,000 is optional generally. Sir, e-way bill compulsory in case when interstate movement of goods are there for job work. E-way bill is not only for when you supply. E-way bill is when you sale also is there, when you stock transfer also it is there, when you do job work also it is there, when you go for exhibitions also it is there. Am I clear, sir? So that's why I'm saying, when I'm saying it here, saying that consignment value, these values which I mentioned are not relevant if it is for job work, if it is for interstate supply, if it is for the the particular specific provision, handicrafts, what is mentioned. Similarly, here I would like to say that transaction which E-way bill will be required is for all. Even if I am selling, if I am returning, purchase, return, import, export, mandatory. It is mandatory, sir. Import, export also it is mandatory. Even for the reasons other than supply. See, GST is paid when the supply is there. So E-way bill is mandatory. Even if it's not other than supply, is also E-way bill is mandatory. Where? Stock transfer, job work, sale and approval, exhibition. So due to inward supply from unregistered person is also E-way bill is there. Am I correct, sir? Keeping this in view, now we will ask you a question. I will say, I have mentioned it to you saying that some particular person has having a warehouse here in Bombay, or let's say in Maharashtra, Bombay Navsheva port or Bombay port he has imported, he has kept in the warehouse. Now sir, from this warehouse, I am talking of exports. First I will deal with exports. In his manufactured goods, he has kept it in the warehouse. From this warehouse, he wants to export it. In export, if you say, there is a seaport, Navsheva port. How many of people have not gone to Navsheva? Oh, that means, how many of people have not seen Taj Mahal in India? So if you have not seen Taj Mahal, you are not an Indian. Similarly, if you have not seen Navsheva being in Mumbai, sir, what is the 28th best port in the world? You should see Navsheva operations to understand customs. Anyway, why I am saying is that Navsheva there is a lot of container freight stations. There are huge number of container freight stations which are called ports attached. In Navsheva import, you take it to Pune, Aurangabad, there is no port there. It's a landlocked city. So what is there in that? ICDs are there, inland container stations, meaning you can import from a gateway port of Bombay, Navsheva, without payment of duty you can carry it to Aurangabad or Nagpur or Pune or anywhere. There is a ICD there. At that ICD, customs officer are there, you clear a good and queue. Now my question is, if you are importing goods here, if you are clearing it to ICD in Pune, Aurangabad, sir, do I have to cut an E-way bill? How many people say yes or no here? This side, my right wing and left wing. Right wing. Do you require E-way bill or not? He is very confident. Anyone has any doubt, smallest doubt, E-way bill is required? Huh? Pardon? Yeah, question is very simple. I have imported at Navsheva, Bombay. I am carrying it to inland container freight station in Pune, or I am carrying it to CFS attached to the Navsheva. Do I have to cut E-way bill or not? Why? Duty is not paid. It is under bond. Goods are not moving. So obviously you don't have to. Suppose, sir, from container freight station or ICD, I am taking it for export. I'm talking of export. I brought my goods, kept it here from, other way around. Sorry, sir, I got confused. Sorry, I get into import, sorry. I'll repeat again. This is about exports. You have brought the goods for export. You have kept it in a warehouse. Now you are taking it to, you want to take it to export. For taking export, you are storing the goods. If you are at Pune and Aurangabad, you can clear your export goods at Pune, Aurangabad or container freight station. You can leave. So goods will be automatically exported. So from this movement, from your warehouse to ICD and custom freight station, do you have to cut E-way bill? Yes. Because you are coming from your regular place to a customs bonded area. Now from ICD to CFS, you are taking it to the port for putting onto the vessel and leaving country. Do I have to cut E-way bill? Not required. So I got confused, sorry. So that means for exports, if you are bringing from your place of manufacture or place of business to a customs bonded area, you have to compulsorily cut the E-way bill. And once you bring it here, if you are handing it over to customs people either here or through container freight station to port, then you don't have to cut. Am I clear, sir? Am I clear? Let's go. Just the same thing, I have kept it here. E-way bill exemptions are there, you are very well clear. Here also one has to, just tell me the question, I will answer it at the end. Place of supply come, don't get into IGST. Place of supply will come only when we are talking whether is IGST to be paid or not. I am not into duty payment. I am on a simple topic that whether my goods that are moving from my warehouse to an ICD or CFS or to the port. General question if I ask you as a client, sir, I am moving my goods from my godown to the Naushiva port. Do I have to cut e-way bill? Only to that extent you remember. Pardon? In the e-way bill you have to mention station A, it is starting from your warehouse, and you show that it is going into the Naushiva port. It will automatically calculate the distance and it will give you time and you generate e-way bill. That's all. You are saying that I am going to the Naushiva port. It has its locations, everything it will calculate time and give you. You cannot take 4 days from reaching from Bhiwandi to Naushiva. It will give you what is the distance and how much is the time before that your goods have to reach there. Similarly, in case you are moving your goods from, let's say, Aurangabad in your warehouse to your Aurangabad ICD or Pune ICD, landlocked ICD, then you say that ICD so and so, it will give you the distance, it will give you the time for which e-way bill is valid. You cut an e-way bill and take it and leave it there. Once if you are moving your goods from ICD to this, you don't have to worry. No e-way bill, nothing. It is moved under customs security. Nothing you have to worry. That is the concept I am trying to drive. When you are doing this, kindly remember the kinds of goods which are already exempted. You should not be foolish to advise to the client saying that for this e-way bill is required. You are well aware that this goods e-way bill is not required. You are well aware that for this goods e-way bill is not required. You are aware that under customs supervision it happens, it is not required. So these exemptions also to be kept, these exemptions also to be kept in mind. Am I clear, sir? Now we'll come to import. Am I clear? And export you are clear? Now we'll come to import. For warehouse to ICD, it has to be an invoice only, no? Because you are selling it to the foreign supplier there. For export shipping bill, you are accompanying with an export invoice. So export invoice has to be there because you are supplying it to foreign supplier. Now we'll come to import, sir. In import, what happens is the goods are landing at the port. Exactly reverse of that. Once they land in the port here, I mentioned you there are two kinds of e-way bills, two kinds of bills of entry. One is bills of entry for home consumption, where you pay duty and take your goods. Other is bill of entry for warehousing. You take your goods, put it in a warehouse, then you can do whatever you want. Keep that in mind. With that respect, you kindly tell me, now in the port, if you are carrying it to your ICD, there is a container freight stations all across surrounding the Naushiva, so that there is no port congestion. So if you are carrying from the seaport Naushiva to a container freight station outside Naushiva, or you are carrying it to the inland ICD, do you have to cut e-way bill, sir? All of you? Yeah means no. Now from the ICD or custom freight ICD station, I am taking it to my place of business. I am taking it to my place of business where I am going to consume, I am going to do whatever I want, sell, manufacture. So do you have to cut e-way bill, sir? Sir, here. Suppose I am taking from the ICD or to container freight station to a bonded warehouse where I am not paying duty, I am depositing goods, and I will be taking out this as and when I require. So for this movement from ICD to bonded warehouse, do you have to cut e-way bill, sir? This side. All of you are not saying. No. So you don't have to cut. But when I am cutting it, X-bond bill of entry here, if I am moving the goods from the warehouse to my place of business, then do I have to cut a e-way bill, sir? Very clear, very clear. No, nothing. Same exemptions will apply which I mentioned to you, where it says these are not required, these are not required, these have to be carried because it is going by cart, it is going by this. So those exemptions will continue. Are we clear on e-way bill, sir? I don't want you to get into silly mistake of not carrying e-way bill and ending up paying duty. You pay duty with customs, they squeeze you, they collect all the duties. Then you don't carry e-way bill, then they will again charge you with equivalent amount of duty. So the customer will die. So that is why I am saying that e-way bill concept is very, very clear, one should have. Now we'll come to, sir, 3 concepts of merchant trading. 3 concepts of merchant trading which I want to cover, and these have been part of the CGST Act. One by one I will cover. First I will show it to you all the 3 at one place. No, I'll take it to one by one, sir. First I will talk about merchant trading. What is merchant trading? Have you heard of merchant trading, sir? Yeah. Merchant trading means basically this is India. This side of the slide is India. This is outside India. Okay, sir? Clear? Now, this particular person is located in India. There is an outside person who is selling it to this person. This person is reselling it to this particular person. Meaning, the transaction is happening between these two persons. Merchant trading means outside India it is happening. That means supply of goods from a place in the non-taxable territory. This is outside India, non-taxable territory, to another place in the non-taxable territory without such goods entering physically into India. Meaning actually transaction is happening from here to here only. Goods are not physically entering into India. So fundamental question, do you have to pay GST? All of you, sir? Pass. That's the only concept. How you get this authority? If customer officer says, no, you have to pay because initially you are purchasing it in India and 100 rupees is selling from here to here. From here to here you are selling 110. So this means you have to pay GST. People may argue. Yes or no? So further the provisions are very clearly given here. Section 72, which I am saying 7.2 of the IGST Act also says, supply of goods imported to Indian into territory of India till they cross the customs frontier. You remember, sir, that term? What is customs frontier? We have read definition also. So is it crossing customs frontier? No. So that means it will not come. You can also quote section proviso to section 5.1. What does it say? It says saying that provided that IGST shall be charged, levied and collected in accordance with section 3 of the Custom Tariff Act on the value determined at the point when the duties of customs are levied on the said goods. If the duties of customs are levied, so where is the question of payment of any GST? So this concept one has to have clear. This is called trading between non-taxable territory to non-taxable territory. Clear, sir? Now next, high C sales. Have you heard of high C sales? Those people who are dealing with VAT would have heard of that. Correct? Now what is IC sales means? Now there is this is India, this is outside. Goods are being supplied from the foreign supplier. This man is a foreign supplier. Goods are being imported by Indian importer. This man purchased the goods. But what this man did is that before even goods arrived, he sold it to another person in India. The invoice is on the name of foreign supplier to Indian importer. Bill of lading is on his name. What else? Packing list is on his name. But before goods arrive in India, before goods arrive in India, he does what is called high C sales. High C sales means supply of goods by a consignee to another person by endorsement of the goods, of title to the goods, after the goods have been dispatched from the port of origin located outside India, but before clearance into him consumption. At that place, sir, does this person has to pay GST for the foreign supply to coming here? But bill of entry will be filed by this person. In the bill of entry, name of original importer and the name of this importer also will be mentioned. Because this person sold his goods. He washed off. 100 rupees, 110 he sold, he ran away. So this person will be filing bill of entry. In the bill of entry, it will be mentioned the original importer is this person. But sir, I am just high C sale purchaser. So this person, when he files a bill of entry, all the documents are on this man, but he will be paying IGST. To that extent, he will pay IGST. But for the transaction that is happening between, let us say, this man to this man, there is no need of GST. Am I clear, sir? High C sales, am I clear? All of you? Now we'll go to inbound sales. This is very, very common. All these are mentioned in CGST schedules. I am just covering it in a picture form so that your clarity would be there. That's all. Nothing new I am inventing. Now here is a warehouse. In India there is a warehouse. In abroad there is a warehouse. So what happens is the goods are imported from abroad. I mentioned it to you, home consumption bill of entry and warehouse bill of entry. Am I clear, sir? You remember? Now the goods have been imported from foreign and kept in a warehouse. Right? Now after keeping in warehouse, who has imported these goods into the warehouse? Actually this person. He has filed into one bill of entry. Now after this person, what he did is 10,000 metric tons imported, 5,000 metric tons he sold it to another person in bond sales. But keeping the goods in bond, he has sold it to this person. So for this person, when he files a bills of entry, he will find what bill of entry? Ex-bond bill of entry. Which into bond bill of entry will enclose? The into bond bill of entry filed with this person. But here, tax is not paid. Value is fixed. Whatever the value that is mentioned in the invoice, that is value is fixed. He cannot change the value. So for this particular into bond bill of entry, when this person files ex-bond bill of entry, he will pay all the duties. BCD will pay, IGST also will pay. But there is no transaction between Inbound sales from A to B, there is no GST levied. This person will pay for the expanded amount that he'll be doing. Am I clear, sir? This is called inbound sales. Acha, VAT people will say, custom department will say, there is a supply from this person to this person, you pay duty. Will you pay duty? Will you pay for this sale? Sure, sir? Any doubt? No need of payment. That's why I said, inbound sale, no need of payment. Am I clear, sir? 3 concepts I have coined and I have covered them. Till now, any doubt? Sir, am I running out of time or not? How much time left over? 10 minutes. Okay, fine. I'll just wind up in 5 minutes. SEZ. Refunds I said I will not cover. Sir, SEZ's concept is very, very important to Maharashtra and Bombay, Naushiva, because lot of SEZs are here. Lot of SEZs are here. SEZ concept has to be clearly understood by you. So for that purpose, what I will do is, I'll directly go to what is SEZ definition. SEZ is defined in SEZ Act. But the same definition has been imported into our IGST Act. Special economic zone or special economic zone or special economic developer, it has been defined in the SEZ Act. SEZ Act came in 2005. IGST Act came in 2017. So what we did was that special economic zone shall have the same meaning as defined under section 2ZA of SEZ Act. What does section 2ZA say? Saying that SEZ special economic zone means this. Meaning basically equivalent to EOU only, goods can be imported without payment of duty and goods can be exported after manufacturing abroad. Now, similarly there is another term called SEZ developer. It is defined in our IGST Act as 220, saying that whatever the definition that you are giving as in the SEZ Act, same thing. If you see the definition in SEZ Act, SEZ developer is there. Meaning in a particular area, there is a SEZ developer. Each tile here is SEZ unit. Individual one person manufacturing footwear and the person manufacturing IT products. This is entire area is called SEZ area. So this is the basic definition. Now sir, here, before I go here, I wanted to tell you that there are certain notifications and there are certain concepts one has to understand. Here be very clear who is supplying to whom. The first concept I am going to take up is supply of goods or services to SEZ unit or SEZ developer. SEZ unit or a developer, same impact. So here it is called zero rated supply, provided it is used for authorized operations. What is authorized operation, sir? No. Like mentioned it to you in SEZ, each person is doing their job. So when they got permission from DGFT, there is one unit, clearance unit from DGFT officials, they get that SEZ developer, they get a permission for doing X operations, footwear manufacture, or let us say garment manufacture. So that is called authorized operations for which the EOU is established. So as long as that EOU is established for particular purposes, the supply of goods anywhere in India to SEZ, no doubt SEZ is also located in India, that is called zero rated supply. As if I am exporting to a country. SEZ is part of my country, but it is given status as if it is abroad. So that particular supply is called zero rated supply. One example I will show you, sir, so that a picture are very clear. Now, here I will take you directly. There is a supplier in UP. I have taken this example very clearly. Sir, he is supplying goods to, let us say, Noida. Noida is also in UP. Okay, forget. Now, this is a regular supplier who is supplying goods to this. Before that, sir, let us read this definition, 75B of IGST Act. Supply of goods and services, both to or by. Well, first we will read to, then I will come to by. Supply of goods services to a special economic zone or special economic developer, SEZ developer, SEZ unit shall be treated to be supply of goods and services both in the course of interstate commerce, meaning as if this is a foreign country, even though both of them are located in UP, if I am supplying the goods from the domestic manufacturer DTA unit fellow to SEZ, it is called, sir, interstate supply. That is the reason I have taken it to this picture. Now, come back to here again. Now, second concept I will tell you. I will not confuse you, but second terms I will tell you. Supply of goods by the SEZ to a unit developer. What does SEZ supposed to do? They are supposed to goods manufacture and export. Suppose they are not able to export, what do they do? What did they do, sir? They sell it in the domestic market. Are they authorized to do? Yes, they are authorized to do, subject to payment of duties. So when they are selling in India, So that supply is called supply of goods by SEZ unit or SEZ developer to DTA unit, meaning any located outside SEZ. This is called import of goods. Conceptually, sir, don't say it is foreign country SEZ, but imagine your mind that it is foreign land located in our India. So this is called import of goods liable to customs duty, which includes IGST, which I mentioned. Customs duty means BCD, IGST, all other cesses. Import of goods liable to customs duty as per which includes IGST as per 37. Customer in DTA shall file bill of entry and pay the duty. Who the unit person who is buying in India is called DTA, domestic tariff area person. He is getting it from the SEZ. Who is the supplier? SEZ fellow. Who is the purchaser recipient? Indian unit fellow. Who is going to file bill of entry? Indian person who is going to file bill of entry. This is the concept called supply of goods by SEZ to developer. For this purpose, I will take you again here. When we read this, we said now you read this again. Supply of goods and services are both by SEZ. Now I am not reading the word to. I am reading by SEZ. Supply of goods and services by SEZ unit or SEZ developer shall be treated as interstate supply. So for this, sir, one example we will see. We will see one example. First, I will take the example of supply to SEZ. Let's take one example, clear example. Meaning, I am a domestic unit fellow. I am a person who is located here in UP. I am supplying it to one SEZ here in Noida. Okay, sir? Am I clear in my example? Now, first of all, this is treated as supply of goods and services. Both are treated as zero rate supply. Am I correct? Am I correct, sir? Are you clear? Now, second proviso to Rule 89.1, CGST rule says that provided further that in reference of supplies to SEZ or SEZ developer, the application of refund shall be filed by the, guess, sir, without seeing this, guess, shall be filed by the who? By the supplier after such goods have been admitted in full. Meaning supplier of the goods after, who is going to file? Supplier of the goods. Who is going to file? UP fellow. This man is going to file supplier of goods after such goods have been admitted in full in SEZ unit. Who is sitting here, sir? There is an authorized officer who is sitting here. Belong to our custom department only. He wears a cap of authorized officer of SEZ. This man will certify, endorse, saying that हाँ भाई all goods have been received. On this basis, who is going to file refund claim? Supplier. Further, I will read, supply, in case of supplier of services, same concept, sir. He has to say that all services have been received, he will file. Am I clear now? Am I clear? But always remember, SEZ unit is for receiving these goods as a zero rated supply only for, sir, authorized operations only. Now, I will take you one example. Now, this example, if you do undergraduation, you will be forced to do PG. Now, I am taking an example where this is entire area as SEZ unit, sir. This particular tile is doing textiles. This tile is doing footwear. This side is doing something. So there is a supply within units within SEZ. Okay, I'll take that example. There's an SEZ which is located in SEZ Noida. This man, Noida man, is supplying goods and services to another unit located in SEZ only. How will you treat this? Any guesses? Zero rated supply or not? Treatment in GST is that this is treated as zero rated supply in the hands of supplier A. Whether who will file the refund claim now? Supplier A or B? Yeah. Clear? Very clear. Very clear. Whether this is for authorized operations of this fellow or non-authorized operations? Clear, sir? All of you are happy or clear? Wow. Let's get on to the DTA. Before I come to DTA, I want to show one more slide to complicate things to you. Okay. Supply. Now let's get on to the other mode. Which is the mode? Import mode. Where is that? Madam, supply by SEZ to a DTA fellow. Let's take that example, sir. Let's take there is a customer in UP. Fine. There is a SEZ here. Who is supplier? SEZ fellow. Whom is he supplying it to? A DTA unit fellow. So this is treated as what? Huh? Import. This is treated as import. This is a supplier he is giving. Who is going to file bill of entry? Who? Recipient. Fine. Now people will ask you authority. I put the authority here. Section 30A of SEZ Act. Sir, if somebody quotes, take SEZ Act, quote him this. It says saying that 30A says that any goods removed from SEZ to a domestic tariff area. This is the domestic tariff area. Am I clear, sir? Domestic tariff area shall be chargeable to duties of customs, including anti-dumping duty, countervailing duty, safeguard duty, basic custom duty, IGST, where applicable as liable on such goods imported. This is the authority. Authority is coming from 30A. Now, sir, again, I want to read this particular act, this particular thing. It says that any article which is imported into India shall, in addition to be liable to IGST at such rate, not exceeding so and so %, all that will continue. Am I clear, sir? Now, one more chart I will show you because time is running out. But okay, I'll show you this, sir. This is a common question many people will ask. When I said that, don't quote me that when I said imagine it as a foreign land. But the question will ask, where SEZ is in India? Is in India, no? It's not ever. That is what it says. India's definition given in CGST Act, which says that India means territory of India is defined in Article 1 of the Constitution. What does Article 1 of the Constitution says? Any guesses? India is union of states, etc., etc. It continues. Its territorial waters, seabed, subsoil, continental shelf, exclusive economic zone. This is also part of India only. So, SEZ fall within the definition of India. Yes or no? If somebody says, no, SEZ is foreign land, I don't follow your act, what you have to say? You have to show this and you say that SEZ is part of India. Supply of services, I will come, sir. Supply by SEZ to it. Then I will also would like to tell you about certain compliance matters about SEZ matters. In SEZ, what happens is that instruction in GSTR 1 says that in case of any supply made by SEZ to DTA, without cover of bill of entry, without cover of bill of entry will happen only when it is other than goods. Please remember that. Supplies made by is required to be reported by SEZ unit in GSTR 1. Because, sir, goods movement compulsorily bill of entry will be filed. When you will not file bill of entry? If it is intangible, if it is supplies of services. Only in those cases, SEZ will report. Supplied made by SEZ on cover of bill of entry is reported by DTA unit in its GSTR 2 and GSTR 3 as imports. Okay? The liability of the payment of IGST that I have mentioned it to is very clear. Now, sir, somebody will ask you saying that why, how are you saying, where is it mentioned, what is the authority? Then this particular FAQ is there. Supply by SEZ to DTA, who is required to pay IGST? This particular question number 80, extract of CBS FAQ says, how are supplies by SEZ to DTA are treated? It is treated under bill of entry. You have to show it under GSTR 3B of this particular importer, DTA unit. If it is without bill of entry, which is generally for services, it is the SEZ which will show you. Am I clear, sir? Now, imports by SEZ, custom duty exemption. Many people ask this saying that, by SEZ, EOU are saying, how are they that these people are importing without any benefit? That has been mentioned in section 26 of SGST Act, which gives lot of exemptions if SEZ unit imports. This is a particular provision, sir, which says that there is an exemption from the duty when the goods are imported by SEZ. There is an exemption from duty when goods are exported from SEZ. This is a basic thing you should remember. This is section 26 of the Exemption Act. Sir, not only that, that is an SEZ Act. We have also given, IGST people have also given, IG exemption to the services imported by SEZ unit we have given under so and so notification, which says, where is saying that exempts services imported by unit, SEZ unit or developer under section 5. Similarly, exemption goods imported by SEZ, there is an equivalent IGST notification which says that if SEZ imports goods, there is no duty that is charged. Then, sir, ladai jhagda. If everything is over, stomach is filled, people will do what? Start quarreling in this country. Then SEZ people will saying that SEZ Act, it is written that SEZ Act will prevail over any act in India. Have you heard of this argument? You heard of? Sab, aap to suna hi hoga. SEZ people will say that there is a famous rainbow papers, one thing was there, Gujarat VAT, it clashed, they went out to Supreme Court first said one, review petition was filed, they again reconfirmed what was said was correct. So, these debates you don't get into it. People who don't have, who have no other work will only quarrel. A true professor will never quarrel. You say there is one particular section, 51, which says that, better be aware, that's why I thought I brought this to you. The provisions of this act shall have effect notwithstanding anything inconsistent. The word is inconsistent. Notwithstanding anything inconsistent therewith contained in any other law, for the time being in force or in any instrument. No doubt SEZ Act is saying that it is a overriding effect over Customs Act, anything Act. But sir, one fundamental doubt to me, this is different. Now you see Article 246A versus 246. Starting, I have shown it to you, what is 246A, 246A says, notwithstanding anything contained in Article 246 and 254 of the Parliament, subject to the clause, the legislature of every state have power to make laws with respect to goods and services imposed under this. So when it is saying not containing anything in Article 246, what is in 246, sir? Union List 1, Union List 2, Union List 3, where duties have been levied. So 246 is central government derives power to enact SEZ Act from Article 246 of this Act. So once it is under 246, by 246 1A is much above that, so I don't have to worry on that. Summary is that you don't get into this debate. If somebody gets into debate, you put whatever you want to do it. Now sir, again the question arises, registration. Two aspects you should always remember for your client, 360 degrees. One is registration, other is e-way bill. Now for registration, whether SEZ unit is required to register, many people will ask. Answer is? Answer is not one time yes, two times you say, yes you say. Why you two times you say? I'll tell you why you have to say. Twice he has to register, poor fellow. That's why I said yes. Sir, one is that you know very well, 10 lakhs, 20 lakhs per person making interstate supply mandatory. We have already read. Now, for SEZ goods supply fellow, mandatory registration being interstate supply, no doubt about it. Fine. Supply goods and services to or by a special economic zone shall be treated as interstate supply, we have read. So when interstate supply is mandatory here, you are bound to register. Correct, sir? No doubt about it. Services I will not enter. One more slide I will show you. Now there is a, why I said S and S twice is, there is a second provision to section 25(1) which came into effect from 1/2/2019. It says, provided further that a person having a unit as defined in SEZ Act in a special economic zone or special economic zone developer shall have to apply for a separate registration as a distinct unit from his place of business located outside the special economic zone in the same state or union territory. I am in Gujarat, I am having SEZ, I have taken SEZ registration, sir. My unit is there within Gujarat, do I have to take or not? It answers very clearly that even if I am having a separate even having shall have to apply for separate registration as distinct from place of business located outside SEZ. Outside SEZ I have a unit, I have a warehouse. You have to take a separate registration other than that. Sir, one more I want to bring it to you, which is been omitted by so and so, which says that first provision to Rule 8 of CGST rules, which says that provided that a person having units in SEZ or being a special economic zone shall have to make a separate application for registration as a business vertical distinct from other unit located in SEZ unit. So this has been omitted from so and so text. The registration procedure is same applicable for normal taxpayers. Last, sir. Beyond this I will not take. Just go into mind mapping so that you summarize through mind mapping. Number one, sir, there is a unit located in Noida. This is a non-SEZ unit. This is a unit located in SEZ unit. Fine. Let's have clarity now. I will ask you questions. Now let us say unit located in India, non-SEZ area. I will not say India now. You are graduated now. Let's say non-SEZ area. He supplies to SEZ. This inter-unit supply goods and services tractable. There are, even though the same fellow, this fellow also A, that fellow also same management may be there. But it is to be treated as a distinct person. Am I correct, sir? Now, he further supplies this fellow further supplies, let us say, there is one more unit here, which is called unit C located here. Interstate supply is also to be covered, which I have already mentioned to you. Here I am particularly mentioned single registration can be taken for SEZ unit is located in the same state. Suppose within SEZ I have two units, unit A, unit B. Do I have to take one registration or two registration? One is sufficient. But even though I am having the same unit, outside this, do I have to take two registrations? That is the concept I wanted to send it across to you. And sir, if somebody asks you this question, how are you saying this? You take him to FAQs. FAQs, it is very clearly mentioned here. I have quoted the FAQ, I have quoted the rule here also, where they have clarified it. Sir, one more chart if you want I can cover, but time is not there, but still I'll just cover this to summarize. This is non-SEZ area, SEZ area. See, always when I talk to you as a concept, I always cover registration, e-way bill. Sir, even this doubt will come to you, e-way bill is required or not when I am moving goods from SEZ. So here I am now taking, there is a non-SEZ area, there is a SEZ area. So I will take the goods are moving from SEZ area to a non-SEZ area. Whether e-way bill is required, sir? All of you? Yes. If the movement is called interest. Suppose sir, there is a unit located outside SEZ, non-SEZ area. He is moving the goods to SEZ. He is supplying it to SEZ. Whether e-way bill is required? Compulsorily required. You don't say saying that is foreign country I am going at. So if this movement is called, it is also called zero rate supply. Perfect, sir. I think that summarizes everything for me. I am not getting into refunds. I'll just skip this area. Maybe if you permit me, sir, one point I want to cover, because some of you may be understanding that customs is different department, I don't have to deal with them. Please understand one thing, saying that before GST came, there are many goods that were imported into the country which were supposed to be used for a specific purpose. They used to be certified by central excise officers located in those factories. Factory people used to say that these goods have come, newspaper print has come, it has gone. Now after GST has come, entire India is occupied by state government and central government for the purposes of GST. The central excise department people vanished. So what government of India did was that, apart from the port area where customers are sitting, the entire India map, they have mapped it as a jurisdictional customs officers. Meaning there are jurisdictional custom officers. Custom officer means you and me, what do we think? People who are located at the airport or people are located at the port. No. There are jurisdictional custom officers after GST has come. For the purposes of ensuring that goods for which you have imported, for what purpose you have imported, there are many benefits that were given if you import for so and so purpose. So that kind of notifications, if you have to be fulfilled or not, which were used to be done by the central excise officers earlier, are being done by the jurisdictional customs officers. So this is a rule that is called, rule that are called customs import of goods at concessional rate rules 2017. Recently it has been modified and said that customs import of goods at concessional rate of duty specified end use rules 2022. For three purposes, sir, you should remember that this jurisdictional customs will be playing a role. If you see Bombay port, if you see Navsheva port, inside port officers have authority only inside port. Rest of all Bombay, Bhiwandi, all this area, port officers are not having. There are specified customs officers who are notified for operating three notifications, or let's say something. One is that EOU purposes, other is for this purposes, that is import of goods at concessional rate of duty. Third is for self-sealing. If you want to do exports, by sealing yourself in your premises you can do. Permission is given by the jurisdictional customs officer once in a lifetime. Once it is given, you can keep enjoying. There are also notifications, sir, in our jumbo notifications. For example, notification number 50/17, which also says that this is subject to import of goods at concessional rate of duty. There is another notification 25/19, I am giving you benefit subject to the condition that you follow IGCR rules. There is another notification for electronic goods 25/2005 subject to IGCR. So what is this subject to IGCR that everybody is saying is important for you to understand. Here what happens is that when a person is following the IGCR rules, you are importing at any port in India. You can import at Bombay, I will utilize in Delhi, no issue. But you have to register yourself with INN. There is a number that is given. This particular number will ask you to give you bond. Once you give the bond, that bond number you have to quote at the time of import. Port of import officer is not going to ask you anything. He will see in your online system that this is a unit located in Haryana. He is importing particular raw material under IGCR. This particular benefit he is taking. He will never ask you for a bond. You just have to quote your INN and import anywhere in India. You don't have to, that particular bond is only for Navashiva to Haryana. No. You can import anywhere in India. But only condition is that you have to file what is a return called IGCR 3. Who will file? The place of manufacture, Haryana unit fellow. He is importing from Chennai, Navashiva, anywhere. So these particular rules are also there, which says that you have to utilize those goods for specified purposes. If you do not utilize for specified purposes, then you will have to either re-export those goods or you have to pay duty on those goods as if you are not availed concession rate of duty. So these are the various things that are mentioned in the EOU. In EOU also it is very clearly says that EOU when it supplies for domestic, you have to pay on the finished goods as if GST is paid. Because sir, at the time of import, they get benefit of BCD and IGD. When you import goods into EOU, you get a benefit of BCD and IGST. Now these particular people are supposed to use it and export it. Suppose they are not using it and exporting it. Suppose they are clearing in the domestic area. Because BCD and IGST are exempted, BCD exemption shall not apply to inputs on payment of IGST on final goods. If final goods is exempted, then he has to pay both BCD and IGST. Sir, at the time of raw material import, you are getting exemption of BCD, IGST. If you are finished good, you are paying GST. Clear, sir? At the time of getting GST, BCD exemption is allowed because you don't have to worry. Unfinished goods, because you have claimed BCD at the raw material. But sir, suppose the finished good that you are selling in domestic market is exempted. Then what happens? You have to pay the BCD and the IGST benefit that you have taken on the raw materials at the time of import when you clear these goods in the domestic market. Am I clear, sir? Are you clear? In this case, you will not pay BCD, but in this case, you have to pay both BCD. There are specific point that I mentioned it here that will cover. I think, sir, sorry for exceeding timing for the next speaker. So if any doubts are there at this stage, you can ask me, sir. Yeah.
So if someone wants to post their questions, please, we can take 2 or 3.
Yeah, makes sense. Yeah. Baitiye sir, baitiye sir. No, sir, it is not authorized operation. I am sitting in SEZ, I am drinking tea. I am sitting in SEZ, I am doing tiling work there. It is not authorized operation, no. So for that, whatever the services that they receive, they have to suffer GST. If you don't want to suffer GST, if you want to cover it as an authorized operation, then sir, you have to go to that particular development commissioner of SEZ and take a exemption for that. Otherwise, other than for you and me should understand that other than for authorized operation. What is your authorized operation, sir? Manufacture of syringes, manufacture of XYZ. Only for that purpose you are exempted. Rest of all purposes, I am building some tiling work, I am drinking tea, I am doing anything there in my SEZ unit. Am I exempted? No. That. According to me, sir, he will not give permission. He will only harass and take money. Why to ask that? Pay duty and enjoy. Sir, you always think one thing. If you are paying a duty, my concept. See, I am also a citizen of this country. If you buy something, if you are paying SEZ, you should be proud. Why? If I buy this tie, sir, 1000 rupees plus 200 I have paid. 200 rupees I have contributed to whom? For nation building. Why should I shy away? Why should I fight for 200? Chalo bhai, instead of 1000 I have paid 1200. 200 I have given it to the nation for nation building. I am very proud that I have given for bridge construction in BKC area. Chalo. So be happy about it, because remember one thing, nation is made when taxes are paid. If you want to litigate for the purpose of litigation, or you want to get permission to that, he's calling it permission. I'll put it as inverted commas permission. Rest I will not explain. Sir, it is not allowed. If he still gives permission, that is up to him and if to you who is enjoying the permissions. Sir, last one person, he asked me one question. Yeah, sorry, sir.
Sir, you are not audible.
Can you come front, sir? No, no, not required. Not required, sir. Huh. What is he saying?
If CA is giving any services
Huh.
to SEZ
Huh.
unit,
Huh.
then whether it is
Yeah, zero rated supply. That is zero. That is supply of services by a DTA person to a SEZ. Sorry, I didn't understand. My friend there.
Sir, I had received an order for supplying of service from, say, for example, a country from Australia. I had received $1 from Australia. But I am providing the services such as, say, medical services of, say, licensing from government. So place of service, say, from Mumbai, I am doing all services at place of Delhi. So what is my GST implication? So though I am receiving services from, say, I am receiving $1 from Australia, but I am doing all the services in India for him.
Your question is that
Yeah.
he is located in India, he is located in India, he is giving services to this person, but for this service, a payment is coming from abroad.
Yeah.
Let it come now, why should you bother? It is an intrastate supply or we intrastate supply you are doing. So for that, I think automatically GST is charged. There is no doubt.
Yeah.
Payment may come from abroad, payment may come from his aunt, payment may come from his grandmother, who knows? So why does you bother?
Yeah,
As
yeah.
long as this man is supplying services to him for a consideration, that too he is paying for that. So I think GST should be charged. There is no doubt.
No.
recipient of service is
Huh.
defined.
Is defined.
So it is not like that I am rendering services to say Chirag Bhai in India.
Correct.
I need to check who is the recipient of the service, and
Huh.
accordingly place of service will be decided
Will be done.
and it will be governed.
Perfect. Place of supply will be decided with the, who is the recipient only. It doesn't matter whether the funds are coming from abroad or not.
Hello, sir. Hello. There is some doubt. So there is some doubt. I am receiving say payment from outside India, say Australia, but I am providing means they require say license, but for licensing the required I require to means empanel some person in India. So, but payment was received from outside India. So, whether I am, since my place of services, which I am availing, is in India, so, and both the person, say from Maharashtra and not from outside Maharashtra, two implications. One is IGST and another is CGST or IGST.
Sir, IGST, CGST, you go by the place of supply definition.
Okay.
In IGST Act, very clearly written, if it is foreign, what is it? If it is domestic oriented, instead of wasting time for all, I'll come to you, I'll explain to you. Let's take out IGST provision. It's very clearly given, have a concept. In fact, place of supply itself, you can study it detail. You just see what is the provision says in different situations and accordingly follow. But don't get confused whether CGST or IGST or you follow exactly what is mentioned in place of supply. Sir, if you want, I can help you out for you.
Sir,
Sir, last question.
Yeah, last question. Sir, you have dealt with ACZ, EOU and all that, but what about FTWZ?
Same as EOU.
Because
Status is same as
nowhere
EOU.
they mention FTWZ. in
Only
any
in
of the
Bombay and
notification.
Gujarat area, FTW areas are still operating, sir. Most of them are renamed as SEZs only all over India. Here still that free trade economic zone, all those words are used. According to the limited knowledge I am having of SEZ Act, they are treated equivalent to SEZ only.
So
There is no difference.
FTWZ also, if we supply from DTA,
Ha,
there should not
same
be,
what
you
we
will be
discussed
treated as
about SEZ provisions, same thing will apply, to my knowledge, sir. If
Okay.
I am wrong, I will correct
No,
myself.
no, okay, thank you, sir, thank you.
Because
Thank you.
in 2013 or so, I have visited one of them, and I was told that they are same as SEZ only, as far as legal provisions are concerned.
So thank you very much, sir, for being humble, simple, and coming here and delivering us your knowledge, disseminating the knowledge. So once again, thank you very much, sir. You have also make us learn